President of PNB speaking. Let's cut across.
So, Raji, you will appreciate the bank has really gone for cleanup, and we have increased our provision coverage ratio, which was last year to the 58% to the 75% this year. So this has provided a lot of strength to our balance sheet. That was one aspect. As regards expected profit, yes, I do agree with you. There were two, three major milestones which we thought we will be able to achieve during the current quarter. One was we have already initiated the process of stake sale in PNB Housing Finance, which somehow because of the regulatory approvals could not get through. And another was basically we were expecting a recovery from the two major NCLT cases which have already been decided, and we were expected that that money will be received back, but somehow because of the some legal tangles that we could not receive. But if you just factor into those, if you take out the impact of one-off incidents, that's a provision for fraud and additional provision for already resolved cases, then we are still, if you take out those effects, we are still in profits.
Help us understand, you were talking about a provisioning coverage ratio that has increased, but your net NPAs and gross NPAs have kind of come down. Let's delve deeper into it. What is the reason behind this? Are you preventing yourself from further slippages in the next few quarters?
You must appreciate that our slippages this year are much lower than my total recovery. So my recovery has gone more than double during this current financial year. Last full year recovery of 5,617 crore. I have clocked a recovery of more than 15,600 crore during the current year. That is in the form of year. And if you see the total recovery, last year slippages were in the last year recovery was 9,000 something, right, and this year it is more than 20,000 crore.
You're expecting a higher recovery in the next financial year.
If you just add the numbers which are on the table of the existing NCLT cases which are there, I think that will add to my numbers.
But Mr. Mehta, we were expecting those NCLT cases to be resolved, then they got stuck in legal tangles, and 2 quarters have gone by and that money has not come in. What is the possibility that that money will come in now in the next quarter, in Q1 of FY20?
We can hope, but then it will depend upon the legal processes, but we are hopeful about it.
In terms of stressed assets, which are the key areas of concern for you in the bank at this point of time?
At this point of time, in the matter of stress assets, I think our corporate book is we have almost factored into, and we are now concentrating more on the MSME sector. We are concentrating more on the smaller sector. We have improved our stress asset management vertical by deploying the additional manpower, which is reflected into our recovery numbers also. So basically, what we are into is we are going to strengthen our system and processes.
No, help us understand in terms of key sectors, which are the areas of concern that are still there?
Right now, the concerns which is there is basically the NBFC sector. That is the area which is still being talked about, and the market perception is about the stress, but that will depend upon the time how it pans out.
So NBFC sector is one area of concern. The RBI is, in fact, Finance Ministry is pushing for a liquidity window if that comes in. Will the banks be open to providing a liquidity window for NBFCs?
Let me tell you one thing. In the entire segment, may it be banks, may it be NBFC, there are always certain good players, then there are certain bad players. So the good players, definitely there will be good NBFCs which have got strong fundamentals. Banks have been supporting them in the past and will continue to support them during the current year as well. And the liquidity window was provided to them even in the past also, and maybe in future, as and when the need arises, we'll provide them.
Right. Let me also talk about, since we were talking about the issue of stress sectors, I have to talk about the two big concern areas. That was, of course, Island FS. Have you completely provided for all the Island FS accounts?
So for all ILFS accounts, we have already factored into our NPL slippages as per the requirements of the RBI requirements. We have already factored them and we have provided them as per the requirements.
Could you help us with the number?
Numbers account wise, I think it will not be good to share.
Okay, shifting focus from Island FS, what about Jet Airways? Has that been marked as an NPA just yet? And there are also reports that how in 2 weeks, 2 weeks kind of a time has been given to Etihad as well as the Hinduja group to kind of figure out the way forward, get a new player on board. PNB has given a large part of the loans in this case as well. How are you looking at that account?
I
and
think
the
that
developments?
resolution plan is being worked out, and SBI being the leader is working on it, and we are positive about it.
Have you marked Jet Airways as an NPA yet?
So far the record of recoveries were satisfactory with us, but when the need arises, we'll do that.
Right. So right now it is not marked as an NPA. Since you did talk about how recoveries are going to be very high, in FY20, that is what PNB is aiming for. This time around, you were, and of course, as a non-core asset sale as well. This time around, you were looking for PNB housing finance stake sale, but that met with a lot of regulatory hurdles. Will this, will you be able to push forth with a stake sale in FY20? Are you looking at resolving some of those regulatory issues that were there?
Yes, there are 2-3 issues. One thing I tell you, stake sale or maybe will depend upon the market conditions. If we get the right valuations, we may think of it. But right now, nothing has been decided about it so far. As regards regulatory hurdles, yes, there may be a market condition since it was a decline scenario and we might not be able to work it out, but maybe next time we can work it out. It will all depend upon the conditions, market conditions, which prevail at the time of taking that decision.
Okay, can we expect in the next 2 to 3 quarters that decision being looked at once again?
It will all depend upon the market conditions. I cannot predict that time.
Any other non-core assets that are on the block as far as PNB
Yes,
is
our
concerned?
previous corporate office, which we are not using right now, and we have already negotiations are on. Besides that, there are certain smaller assets which we are trying to dispose of. So roughly 1,000 crore of fresh monetization of the non-core assets we are planning.
Mr. Mehta, in terms of capital adequacy, how are things looking for the bank at this point of time? And also, what are the kind of fresh capital infusion requirement that you would have for FY20?
If I hope that these resolutions of these both of these NCLT cases they come out quickly or maybe during this quarter, I think we'll be comfortable.
Any number that you would like to put for it?
Yes, we are expecting a minimum recovery of 6,000 crore in these accounts, and which may give us a plowback of roughly 4,000 crore.
Right. In terms of, and I was speaking right before the next monetary policy as well. We have seen that rate transmission has been one of the big concern areas for the RBI. Despite a 50 basis point rate cut, a lot of transmission has not really happened. How are you looking at this issue? What kind of steps will you take in the months to come or in the weeks to come to kind of ensure that this transmission takes place? Because the RBI and the last policy did come out very heavily and even talked about how they will come out with guidelines to ensure rate transmission taking place. So,
as regard rate transmission, I can vouch for it that PNB was one of the first who has reduced the MCLR rate whenever there was a fund, and this is basically based on a formula which has been given by the Reserve Bank of India. So it basically not only dependent upon the repo rate, it is also dependent upon the bank's ability to raise the incremental deposits and the incremental cost of deposit and the other formulas that really work into deciding the MCLR. But definitely when our cost of incremental deposit goes down, we'll pass on the further rates.